Give you the markets update now. The JSE facing mixed trade today as stocks rose on the back of gains on Wall Street, but concerns remain about central banks hiking interest rates, which could dampen the global growth and increase the risk of stagflation. Jimmy Moyaha is independent analyst, and he joins us now to talk us through some of the market developments. Jimmy, good morning to you. So give us your sense of how local trade is faring this morning after closing slightly weaker on Tuesday.
Good morning, Coley. Good morning to the viewers. Local early trade showing mixed signals. We've got some stocks showing some positive trade. We've got Naspers and Process up at their early morning trade. DRD Gold up as well. But we're also seeing that continued concern from a global perspective around the inflationary concerns, around the ongoing tensions in the Russia and Ukraine, and what seems to be happening from a central bank perspective. We know the ECB was set to speak yesterday. We know that we're expecting inflationary numbers out of the US later in the week. And these are all signs that are concerning not only investors, but global institutions like the IMF as well.
Yeah. Let's talk about the World Bank, which has cut its forecast for global growth in 2022 by almost a third. What are the factors that are influencing this kind of outlook?
So, I mean, the World Bank cited that there are a lot of concerns that, or potential headwinds that we need to consider from a global perspective that could drive things like stagflation and could prolong the situation that we're experiencing as a world. I mean, they outlined obviously the Russia-Ukraine tensions, the lockdowns we've seen in China, some supply chain disruptions that we've seen since 2020, 2021, and so on. And these are factors that they've outlined could hamper growth and potentially keep inflation at elevated levels, causing the lower and middle income countries and developing countries to suffer the most as a result of this.
The International Monetary Fund, Jimmy, that's the IMF, it says it's concerned about the country's economic growth outlook and the implications on employment in particular, whether you talk poverty and indeed inequality, which is South Africa's triple challenges, as has been said. Talk us through just some of that sentiment.
Certainly. So, I mean, the IMF wrapped up their visits to South Africa. They were here from about the 26th of May to the 6th of June. They wrapped up that trip, and a lot of the consensus around that was around infrastructure concerns, around energy security concerns. In particular, Eskom came to light, the railways as well as the ports came to light from an infrastructure perspective. They did also allude to the concerns around collective bargaining that we've been seeing from trade unions as of late, and mentioned one or two unions in particular. And the overall concern and the overall consensus is, of course, that the more unstable or insecure the energy situation is within South Africa, the more it does damage towards the development and recovery of the country. They outlined that, of course, large corporations and private sector businesses want to invest in the country, but that the focus should also still remain small and medium enterprises, as they seem to be the biggest creators of jobs in terms of more sustainable jobs, frequent job creation, and in terms of tackling the unemployment rate we have in South Africa. They've outlined that those are the areas that need to be tackled, but again, infrastructure constraints and the lack of stability and energy security, that does put a big dampener on the ability to show economic growth and show economic recovery, which obviously then has a real effect on the increased unemployment rate, as well as the widening inequality gap in the country. So they outlined concern that they would like the government to be looking at quite urgently, and these areas affected their outlook in South Africa, at least in the medium term.
Jimmy, I'm really sorry to do this. The line to you, suddenly it has gone from bad to worse. Let me see if I can squeeze in the last question, but if it does fail us, we will have to cut the conversation. Let's try and conclude with company news. The Spar Group publishing its interim results and cash dividend declaring this morning, or should I say they've declared that dividend. Talk us through their numbers briefly.
So Spar reported rather positive numbers. They reported an increase in revenues and operating profits. They reported an increase of about 4% in the diluted headline earnings per share. They also outlined that they're going to be more heavily invested in their online businesses, getting the Spar2U online segment into more of their independent retailers. They have still got a couple of stores that have remained closed post the July unrest that we saw last year, a couple of top stores as well. They're forecasting, of course, that with the return to normality and the lack of, or they don't envision ongoing lockdown in South Africa, and that their citing will be good for their liquor businesses from Top's perspective, but also for their revenues for the Spar Group going forward. They plan on rolling out fresh food and fresh produce aspects to their stores, revamping some of their stores in the coming months. So it'll be positive to see how the business can continue to grow and how they'll want to compete with the likes of Woolies, Dash, 6060.
Jimmy Moyaha, thank you very much for that market update. And let me apologize to you, the viewer, for the terrible line there. Not so bad in parts, but yeah, failing us towards the tail end of our conversation there. So apologies for that.